Hello and welcome. Thank you so much for attending today's webinar brought to you by Sika and Transworld Systems. The power of the partnership with Sika and Transworld Systems has created a seamless interface called Dental Collect that allows you to submit past due accounts easier and get paid faster. Our focus is to help you with the business of your practice so you can focus on caring for your patients. So without further ado, I'm going to turn it over to Wally Schmader to give you the 8 keys for dental practice cash flow optimization. Wally?
All right. Thank you, Melissa. I'm excited to have everybody here this afternoon. Thank you for joining us on this Friday afternoon. Of course, the big thing that Sika and Transworld Systems have in common is our concern for dental practices cash flow. And I've spent almost my whole career paying attention to what works and what doesn't work when it comes to cash flow. I consider myself a best practice aggregator. And what you're going to see today is all the best things we've seen going in progressive dental practices over the last 5-6 years, and things that we know for a fact will accelerate the cash flow in your practice and allow you to do some things a lot easier and with a lot greater effect. So with that, let's go through our starting comment. And what I'd like you to do is just read this along with me. If your practice is doing billing, follow-up, and collections the same way you did 5 years ago, you need to strongly consider making some changes. You think about that, all the things that have changed in our practices, all the things with regulations, all the things with how we deal with our patients, all the things around privacy, and yet many practices continue to do billing and especially follow-up and collections in exactly the same way they did just 3 or 4 years ago. A lot of consultants would tell you that in a dental practice, if you're doing anything the same way you did 3 or 4 years ago, you're probably engaged in some kind of obsolete practices. And that's where we'll start today, with the idea that there are things we can do to improve this part of our business. So here are the 8 keys for dental practice cash flow optimization, and what we'll do is we'll take these on one by one. They are the crucial importance of practice cash flow. The second is collecting money is, in fact, harder than it's ever been. Understanding what we're up against as dental practices. Learning to identify the 4 payer types, the 4 different kinds of payers that come walking into our office every day. Improving internal collection practices in our offices. Understanding the biggest cash flow threat that's out there for us. It may not be what we think it is. Number 7 is working profitably with a collection agency. Number 8 is considering some new cash flow solutions that other dental practices are leveraging to improve their results. So let's start with the crucial importance of cash flow. And just 3 points we want to talk through here. One is that the AR in many dental practices, perhaps most dental practices, is the biggest financial asset in that practice. When you think about the value of all the equipment, the value of the personnel, the value of the client base, all of that in some cases is actually less than the value of the outstanding AR in a lot of practices. Very, very important asset. The second is your cash flow is the best indicator of your overall practice efficiency. If your cash flow, your days and receivables, all those numbers are good, you're probably running a really good dental business. A practice cash flow can be influenced in many different ways. It's just not about billing and insurance work. There's a lot of things we can do decisively inside our practices that will help us increase and accelerate our cash flow. Next, collecting money is harder than ever. We've put together a few headlines here just to help you understand the environment we're in and why collecting, even while recovery rates have gone up slightly in the last 2 years, why it's still very difficult to be a really positively collecting dental office. First, 1 in 3 people now have an account in collections with a collection agency, 1 in 3 Americans. The average consumer has 12 creditors, and that includes you and it includes me, and it means that everybody has 12 people that are owing, that they owe money to on a monthly basis. And if you stack them up, thinking about who that would be, it'd be your mortgage or your rent, it'd be your auto note, possibly, it'd be your cell phone, your cable bill, it'd be your gas, your electric, all these different things you have, and those are just utilities, right? That's before you get into any kind of store cards, your Target card, and all the different things you might have. So try to imagine with 12 creditors for all of us on the average, where the dental bill might fit on that stack when you come to making a priority of who you're going to pay first. And you see how we get in trouble in the dental business quickly. FICO has just de-emphasized medical debt on credit scores last fall, as many of you know. The organization that decides how credit ratings work and what's important and what isn't said that medical debt is not going to weigh the same as any other kind of debt when it comes to consumer credit scores. So that's another way of saying paying dentists, paying doctors is not as important as paying everybody else. Next, the average adult U.S. adult has $5,200 in delinquent accounts. Now that takes into consideration people that have none and people that have hundreds of thousands of dollars, but the average for all of us, $5,200. The national recovery rate last year for dentists and medical practices was 14.6, so about 1.5 out of every 10 accounts that goes to a collection agency or a collection attorney is collected. The sources here are CNN Money, and ACA, of course, does the recovery percentages. So you can see with all these things together, it's easy to understand why collecting money can be so challenging. Next, you've got to understand what we're up against in the dental business. What's out there that would maybe get in the way of having a positive cash flow? First is businesses, commercial businesses in particular, are really good at getting paid. They can employ a variety of aggressive tactics that we cannot employ in the dental business. Their collection practices are not scrutinized the same way they are in the medical world, as you know. And you're trying to collect from the same people that they are. So the commercial businesses have a lot of advantages when it comes to collections. So you need a progressive approach. Many of the collection strategies used in the past, they just don't work anymore. Some of the collection practices used in the past aren't even legal anymore. So practices are not using all the resources available to manage their cash flow. And this seems to be an area where good advice can be hard to find. Accountants don't always have good information for us. Of course, we don't get a lot of this information in dental school. Administrators don't hear a lot about this. So it's hard to get good advice about cash flow. So the third thing is you've got to be prepared to compete. Practices must be very active on slow-paying patient accounts. It's very important that you think of it as competition. Remember, you're one of 12 people that they owe money to. You're one of 12. So how are you going to pull yourself up? How are you going to get to be something other than a very low priority? Early identification, early intervention, those are crucial. Practices must leverage all these new tools and techniques to compete with commercial businesses for collectible dollars. Right? There's only a certain amount of money that people are going to be able to pay. That includes your patients, and you've got to be in there and ready to compete with all the other folks they owe money to. The next key that you see with very progressive dental practices is learning to identify the 4 payer types. There's basically 4 people that walk into your office every week, and you get more of some than the others. Luckily, here's what we know. You're going to deal with all 4 of these. You don't know who they are when they walk in. They all require a different approach, and there's a specific way to collect from each type. Let's look at these as we go from left to right here. First is the dutiful, and we all know this person. This makes up the majority of all of our patients, luckily. This is the person who gets their bill, and they pay it. Often they're paying on the way out of the office. If they don't, they pay as soon as they understand the insurance share. So these are the great patients. A lot of times they're your long-term patients. They make up approximately 90% of all of our patient bases, with some variation based on where you are location-wise and the demographics of your customer base, your patient base. The next category is a very big category. It's called distracted. And these are the people that are going to pay. They intend to pay, but they're just distracted. They don't consider paying bills to be a top priority. This person has piles of bills in different places around their house. Often there's things on top of those piles of bills. They're very likely to be in the 60, 90, even 120-day category, but they're going to pay. They just need a little bit more attention. That's the distracted category. Perhaps there's some of those here in our meeting today. The next is the disrespectful, and this person actually has not decided whether they're going to pay or not. They have bills they just don't pay, and often those are going to be health and medical type bills, because those are the ones where there's the least consequences for them. So the key to the disrespectful payer is that they have to believe that there's going to be some kind of consequence for not paying. Maybe not an overt threat, but something out there that means that they need to pay this bill even over others. The last one, and luckily it's by far the smallest percentage. It's 1 or 2% of a normal dental practice. These end up being your write-offs often. It's a deliberate debtor, and this is the person who knew when they set the appointment that they weren't going to pay. They knew when they walked in. They knew when they walked out. They weren't going to pay the bill. So let's talk about exactly how we can collect from all 4 of these types, because we know we're dealing with all of them. So what makes them pay? The dutiful patient, we know they're going to pay on their statement, right? Many times they pay on their way out of the office. That distracted person, reminders. They need to be asked again and again. That's how they find the bill in the pile. That's how they take your bill and put it on the top of the pile, right? This is the person. The disrespectful, often the best threat, the best consequence that you can give them is third-party impact. The involvement of an agency, the involvement of an attorney instantly makes them understand that there will be a consequence for not paying you, which is exactly what they need to pay. And this 4th type, the deliberate, these are the professional debtors. Yes, there's such a thing as a professional debtor, and they need to deal with professional collectors, right? These are the types that have a lot of different resources, even legal resources, asset investigation resources, skip tracing resources, all those things to find and collect from these people. But even with all of that, it's a very high-risk category. Again, luckily, it's a very small percentage of our patients. So again, a progressive dental practice learns to identify and think about how they're going to deal with all four types of payers that are walking through the door. Next, we want to take the steps we can take to improve our internal collection practices. And there's some do's and don'ts that we'll start with. So first, do have a fixed credit policy that covers these basics. I think most of you all have these. Broken appointments, what's your charge, what are your rules? Are you charging interest on late payments? What are your acceptable payment terms? These are all things that should be policy bound, that you should not have decisions made, one-off decisions made on these things. You should already know the rules. Everybody in the office should know the rules. Anybody behind the desk should know what they're allowed to do and not do. The second step on the do's and don'ts is don't put aging on the bottom of your statements. It's amazing how many statements we see out there that still have these entries on here that actually cause slow-paying accounts. And I'll show you two examples here. One is the aging being shown at the bottom of the statements. And so many statements in the medical world, really only in the medical world, medical and dental world, do you see this, is a crawl across the bottom. You see, current, 30 to 60, 60 to 90, 90 to 120. I've seen them go the whole way out to 6 months. So if I'm a patient, let's say I'm one of those distracted or maybe even one of those deliberate, and I see that my balance is in the 30 to 60, what are those other two categories telling me? That's right. I've got 30, 60, or maybe even more days to pay. So instead of being a 30-day statement, this is actually a 120-day statement. And if it doesn't look that way to you, I can guarantee you that it looks that way to that distracted or deliberate type payer. So we don't want that on there. The second thing that's a good idea to remove is the amount paid. All statements show the amount owed, right? That's easy. But a lot of statements show the amount paid. And imagine if you got that from your electric company or something with the idea that you could pay something less than what's owed. We never see that from commercial creditors, do we? We don't see that from any utilities. We would never see that from our mortgage or our rent. Right? Does your cell phone give you your partial payment amount? Of course not, but we tend to do this in the medical and dental community. So that's a good thing to get rid of as well. If someone's going to make a partial payment, they shouldn't be able to decide what it is and just write it down. They should have to contact the office. Does that make sense? All right, next, let's talk about how to talk to patients, right? And we'll start with what you shouldn't, whoops, too far there. Things to say and things not to say. So let's start with the nots. Things you don't want to say across the counter or on the telephone to a patient about their payment. How much can you pay? When can you pay? Can you pay something? These are all open-ended questions, right? We want to leave them a little bit more with our own expectations of how much they should pay. Again, if they can't, they won't, right? So we might as well give them the best possible expectation from our side to show them exactly what we think should happen. So what you should say is things like, how will you be paying? We need to take care of this past due amount today. Things like that imply that you're expecting a certain amount of payment. Because if you don't say those things, you leave it to the patient often, they're not going to get that commitment that you want. All right, next are some myths. And let's cover these together. These are very broadly believed myths about collections and cash flow. Number one, that active collections can scare patients away from a practice. And a lot of dentists believe this. They think that if you actually pursue a patient or aggressively pursue a patient, even if they're very past due, that's a customer retention risk, that somehow we would actually scare away a patient by insisting on being paid for our services. And actually the opposite is true. We find that practices that don't insist on being paid, often they end up with patients that don't truly value the service that they're getting from that practice. So the best thing you can do is have a fair policy around collections and cash flow and get paid. Certainly the patient that owes money to a dental office is not going to come in for a routine, kind of maintenance appointments that we all want, right? If they owe you $138, they're not going to come in for a tooth cleaning because now that ends up costing $138 plus whatever the service would have been in the first place. So the best way to retain your patients, the best way to see them consistently, the best way to have them for maintenance is to get paid. The next one is allowable to add collection agency charges to patient balances. Someday this is going to go away, but still there are practices out there that believe that you can add your 25, your 35, your 40% onto the bill and then place it with your percentage agency. And this gets struck down again and again. It was struck down again in February. where in other states that under no circumstances is this allowable. That's a form of usury, and it's debtor abuse is what it is. So if your agency or attorney is telling you to do this, you definitely want to get some backup, legal backup, to make sure that it isn't a risk for your practice. I've never seen it in any state under any circumstances where an attorney would let this pass. So check it closely if you're getting advised to add the percentage on top of the balance. The last one is the cost of collections, and this is a big one that we hear. The myth is that the cost of collections is the percentage the agency charges. So to say that they're charging me 33% and they're charging me 25%, 25% is less, that must be a better deal. We need to be more sophisticated than that. The number we want to care about, the number we want to pay attention to, is the net back, right, after you consider the recovery rate. The cost of your collection agency is the value of the money they don't collect, right? The value of your money that doesn't get collected. That's the cost. What they charge a percentage is actually not important at all until you figure in the recovery rate. Okay, so think about that. The cost of your agency, the cost of what to collect, is the cost of the money that goes uncollected. It's not the percentage that's actually being charged. So all these things are myths. They're things that aren't going to help us increase our cash flow. There are things that can actually get us into some trouble. All right, well, let's keep moving along. Let's talk about the biggest threat to your practice's cash flow. It's depreciation. It's as simple as that. Depreciation is by far the biggest threat you have. A lot of offices would imagine that it's 3 or 4 or 5 or a half dozen of the worst payers, right? The people that are hanging way out there, 6 months delinquent, 9 months delinquent, maybe a year, maybe more than a year, that those are the biggest threats we have to our cash flow. And that's simply not the case. It's the fact that all of our accounts are depreciating every single day, every single night, on the weekends, during the holidays. The whole group of them are depreciating together. That's the biggest threat we have to our cash flow. And I'm sharing here, you see the graph on the board. You've probably seen versions of this in different magazines. Certainly the dental magazines have things like this. And it's the U.S. Department of Commerce study that shows the depreciation, just how aggressive it can be. Look there, after 30 days, 5% are not going to pay. After 60 days, you see it's down 15% are uncollectible now. After 90 days, it's almost 30% uncollectible. Let's go out to 6 months, 180 days. 70% of those accounts are not going to be paid. After a year, 90% of the money of these statements, of these bills, is uncollectible, right? So what we need to appreciate and understand is that all time's not on our side, right? We've got to be very early in our intervention. We can't wait until accounts are 6 months old before we start to do aggressive follow-up. No one can collect it when it's that old. No one can collect it. So the best thing we can do is get something going on early inside the practice, even outside the practice, to make sure that we're pursuing accounts when they're actually collectible. So what's the biggest threat to our practice's cash flow? It's depreciation. Next, let's talk about how to work successfully with the collection agency. We've got some detail here. I'll go through this quickly, but it's important. And let's start first. We've got 2 parts, right? What to watch out for and what to look for. So on the what to watch out for side, one of the main things you want to look out for when you're a dental practice is something called skimming. Maybe you've heard this word before. It's kind of jargon in the collection industry. Unless your balances are well over $1,000 per, they're going to get skimmed, which means that the small average dental balances we're going to see when they're put in the hands of collection agencies often are not getting the most attention. Remember, for the most part, these companies are being paid a percentage, right? And if you've got a stack of $800 bills and a stack of $250 bills, and you're getting paid 33% to collect either one of them, what are you going to work on, right? So we would all do that, and so it's no surprise that they would get skimmed. Next is overcharging. A lot of the money collected by agencies and attorneys is collected through the mail. Industry sources say that 88%, as much as 88% of all collected money is collected through the mail with a written correspondence coming from an agency or coming from an attorney. So what you want to do is make sure that you're not paying a full contingency fee for what is actually just a letter collection or a reminder type collection. I want to share with you some stats here on the numbers coming in. These are based on those averages we looked at earlier. Recovery rates. Okay, so here's 100% of the money that your practice is submitting to the agency. These are all our averages. This is all of us put together. Of those, about 25 to 50% of the accounts are going to be actively worked. Okay? And they make the choice to balances. Skimming can also be done on the age of the accounts. Imagine that dentist A has just placed a bunch of accounts that are 6 months old, and dentist B just placed a bunch of accounts that were 14 months old, and the balances are all the same. Right? It's another easy decision. So they can be skimmed on aging. They can also be skimmed on location. If you have some of our practices have kind of far-flung patient balances where some are even over state lines where it's a little bit more complicated to try to collect. That's another way that people skim. So that brings us to about 25 to 50% of the accounts being actively worked. Of those, 10 to 20% are collected. Like we said, the average is about 15%. And of those, an average of 25 to 50% goes to the agency. Okay, that's the average percentage. The whole average ends up being about 38%. So 25 to 50 is our range. Your agency is probably in that range. So let's look at the net back. So for every $1,000 we put into collections, we get back, on average, all of us together, $94.90. That's the net back after fees. So the best thing we can do about that is that early intervention, getting things turned over sooner when they're more collectible. Because $100 out of $1,000, right? That's not much. The next one here on the what to watch out for is the good money after bad. We've all heard that cliche. And we want to be wary of the agencies that have add-on fees. You'll place an account and you'll get a bill, and the bill is for skip tracing, or the bill is for court costs. You already don't have the money, and now we're paying more money to try to collect it. Attorney's fees, credit checks, asset investigations. We'll see all those things. So you really shouldn't be getting bills along the way. You want to be in a situation where they take a percentage of what gets collected. And that's it. Your collection fees should really cover all of those expenses, and that should be negotiable. Last thing is compliance. We're in this business, right, in the dental community. You've got to have a compliant collection agency. And the truth is, it's very hard to be a collection agency. There's a lot of regulations, a lot of laws that dictate every move an agency makes to collect your money. So you've got the medical community, the dental community, highly regulated. You've got the collection side of it, also highly regulated. So hiring a non-compliant agency, a non-compliant attorney, one that's not a medical specialist or a dental specialist, that puts your practice at a significant risk. You want to do your homework before you're hiring an agency. So let's go over to what to look for now. A couple things to look for, maybe some of these things you haven't considered before. The first we'll call tiered pricing. And what you'll see is some progressive agencies have kind of an a la carte pricing structure. And that means that if an account can be collected easily, let's say one of those distracted folks that just need a reminder or a simple written collection demand coming through the mail, they don't charge a full contingency percentage. They say, hey, we collected this with a reminder. That's probably not worth 33%, so we've got a different kind of pricing for that. Another thing to look for is a diplomatic approach. And this is very important, but maybe not for the reasons you would think. We definitely want a diplomatic approach just to be diplomatic with our patients, right? We want to make sure they know that we value the relationship. We certainly don't want to make them angry or sensitive to us. But the main reason for a diplomatic approach, really, is so you can place the account sooner, right? We know how much more collectible they are at 90 days, 120 days. If we have a diplomatic approach, we'll feel better about turning the accounts over earlier, right? So have your agency, whoever you're working with, sort of demonstrate to you that they have a soft or diplomatic approach. Make sure you feel good about it. And once you understand exactly what's being said, then you can be a little bit more aggressive, a little bit more progressive about when you place the accounts. Next, robust reporting. A competitive agency should be able to tell you their recovery rate, their net collections, total assignments, right? You should be able to get these things. We're always amazed at, in consulting with practices, how little information they're able to get from their collection agencies. I mean, this is someone who has a lot of your money and a lot of responsibility for the success of your practice. They should be able to give you whatever you want. And in that same vein, online interface is important. If you're using an agency that requires you to fax paperwork or mail stuff or provide copies of account information, it's time to say goodbye. This says 2014. It's actually 2015 now, and the days of faxing, the days of anything other than an encrypted digital type assignment, that's not going to work, right? There's regulatory risk there. Plus, it would tell you if they're doing things that way, it says something about probably their other processes as well. So you want an online interface. And last, maybe most obvious here, is a healthcare specialty. Your practice should use an agency with a proven approach for dental collections. They should be able to provide reports, testimonials, maybe be endorsed by somebody that would show you that they've gone through some kind of peer review. They should be able to demonstrate to you a specialty in dental or at least medical collections, because it's a whole different business. All right, so with that, I'll share with you something we put together a while back to help practices understand what to look for in an agency. Now, obviously, Transworld Systems is a collection agency. We're proud of the work we do, but we're not the only ones that meet these criteria. There are over 4,000 collection agencies in the United States. Only a few can pass this test, and you want to find one of those few. So let's go through the 7 quick test questions. You ready? Number 1, are you a healthcare collections specialist? Okay, that's simple, right? You want to work, there's plenty of them out there. You want to work with an agency that has a specialty in dental or medical collections. Next, do you have diplomatic and intensive services, right? We know that all debtors are not the same. We know that if there's a diplomatic approach, you're going to feel more comfortable turning the accounts over early. These are important things. I mean, clearly, most agencies do have an intensive service, but it's nice to have both. Next, do you offer fixed fee service options? Do I always have to pay a percentage, even if you collect it fast? Do I have to pay a percentage if you collect it through the mail? What if you collect it with a reminder? Do I have to pay a percentage? There's a good number of agencies out there now that have fixed fee options if they can collect the account early in the revenue cycle. Next, do you have an online collections interface? Can I place accounts online? Can I check my reports online? Again, it's 2015. We should be able to have that kind of relationship with our agency now. Next, do you offer first-party services for your clients? This is one of the new ideas we'll talk about. First-party services are a great idea. It allows the dental office to get help from a specialist, right? And yet, when the specialist contacts the patients, they're doing it in the name of the dental office. So there are agencies out there that will do this. They'll contact the patients in your name for a very low cost, very early in the cycle, and that way you can hit them all and not have to figure out whether you're going to be able to follow up with all the slow payers or not. So first-party service means that any contact, any communication is done in the name of the practice. Next, are you fully compliant with everything, right? All the initials, FDCPA, TCPA, HIPAA, everything you need to be compliant with. Any good agency in the medical space should be able to demonstrate and show you this kind of compliance. And the last is, are you recommended by healthcare industry experts? And if you're a medical specialist, if you're a dental specialist in the collection space, prove it. Show me who says so. It's important that there's peer reviews. It's important that there's recommendations. It's important that there are endorsements. That's why we work with people like CICA, because we know when someone's the best in the business, it's going to be obvious, and that's the kind of person you want to align yourself with. So that's the test. Make sure your agency can pass the test, or your attorney. All right, number 8, this is the last of our 8 keys to cash flow optimization for a dental practice, is be open to progressive solutions. There's some good ideas out there, and they're certainly worth trying. Here's a few examples. Early out strategies. Most practices by now have tried some kind of early out strategy to get a third party involved sooner when the accounts are more collectible. Next, a multi-step AR process, right? We know that there's different kinds of payers. We know that they're all going to react differently to different things. If you've got someone who's just a distracted person, the last thing you want is some kind of legal correspondence going out. They don't consider themselves to be a debtor. They don't consider themselves to even be delinquent. They're just distracted. So you want to have a different kind of approach that meets those different payer personalities. Next is first-party services. We just talked about this. These are services done with patients in the name of your practice. It's a great new way to get help and get a lot of attention and a lot of reminders going out early in the cycle without having to go, turn yourself inside out with your internal follow-up. Next, fixed fee collections. Talked about this. Lots of services out there now, excuse me, that are happy to do fixed fee services in addition to whatever kind of contingency fees they have. Insurance claim prompting. There are, some of you have done this, some of you have heard of this, but there are services out there, agencies, attorneys, third parties, that'll deal with slow-paying insurance claims the same way they do slow-paying patients. They know what to say to get your claim on top of the pile. They know what to say to bring up the state statutes that make it so they have to pay within a certain amount of time. They're all very different, right? And these insurance companies are everywhere. It's very hard to keep up with that yourself, but it's easy for a professional company that's in that business to do it. So insurance claim prompting, insurance claim resolution, that'll be a big part of the future of how we keep our cash flow moving. Next is an automated collections interface. Here's where CICA comes in, right? Some way to get some automation put on this part of your business. And we've all seen so many positive things come from automating different parts of our practices. Why not automate follow-up? Why not automate reminders? Why not automate collections? There's a lot of great ideas out there. And last one, the patient portal technologies. I mean, we can say pretty generally anything that makes it easier to pay is taking advantage of some of these portal technologies that are out there. So those are our 8, and as we finish up, we always like to finish with what we call the Healthcare Creditors Bill of Rights. We could call this the dental creditor's bill of rights. And what it is, it's just a set of beliefs, just a set of thoughts that I think will resonate with you about how a practice should work with and work alongside the patient. So first, all providers should be able to expect to be paid on time. Okay, that's a right. Extending credit is a courtesy, right? It should not cause financial or regulatory risk to a practice. The third, practices should be able to focus on their specialty, whatever it is, free from the burden of collections. You should not have to be a collection specialist if you're already an orthodontic specialist, right? It's understood that unpaid bills negatively impact everyone, right? It makes the prices go up. It makes it harder to get appointments. It makes it more expensive to buy supplies. Unpaid bills are the driver of a lot of the highest costs we pay in anywhere, but certainly in the medical community, unpaid bills, uncollected amounts, those make practice costs go up for everybody. Late-paying patients should be held accountable to their obligations in a dignified, lawful, and respectful manner. A medical debt is just like any other debt. If it's legitimate, it needs to be paid. All right, so let's review our content for the day. The 8 things we went through in this short, fast presentation, we went through and talked about the crucial importance of cash flow and how it might be one of your practice's biggest financial assets. Next, we discussed why collecting money is harder than ever. We talked through the unique challenges to medical collections, how it's different, how you need to be a little bit smarter. We learned to identify those 4 payer types that come walking into our practice every single week. We discussed how to improve our internal collections, some of the tricks, some of the things to watch out for. We reviewed your biggest cash flow threat, which we now know to be depreciation. Number 7, we talked about working profitably with collection agencies, how to find a good one, how to have a good relationship. And last, we reviewed some of the exciting new cash flow solutions along with the CICA services that can help your practice accelerate cash flow. So with that, I want to thank you all for joining our meeting here on a Friday afternoon. Hopefully you got some good information here. We really appreciate you joining and listening in. I'm sure that if you implement and deploy some of these solutions, your cash flow will be better than ever.